All right, everybody. Today I have another special guest, a colleague and a friend of mine, Dawn Cameron, another well-seasoned loan officer on our team. She's been in the business for over 20 plus years. So welcome, Dawn. Thank you for taking some time.
Thank you, John. Happy to be here.
Yes, awesome. So one of your strengths as a loan officer is your devotion to renovation loan financing. And you also have a lot of ties to professional remodelers organization. You've been a part of Libby, Long Island Builders Institute, NARI. So you've been around and have a lot of experience and contacts in the industry. So let's talk a little bit about those relationships that you've had and how they've helped you grow your business. And let's also talk, obviously, about renovation loans, because I'd love to share more information about that.
Absolutely. So just to give you a little bit of a background, many, many years ago at another lending institution, I was the construction lending manager. I was a member of the Long Island Builders Institute with them. That was probably in about 1999 to 2001. And then, the mortgage business became everybody's business. So all the builders became mortgage brokers as well. So that kind of gravitated me towards renovation financing and going and working with the remodelers more than the contractors.
Actual builders, yeah.
Right, exactly. So I joined an organization called NARI, which is the National Association of the Remodeling Industry. I since became president of NARI in 2010 and 11. So I dealt with a lot of contractors. And where I got business from them was when they were doing a project for one of their homeowner customers. If they were putting on a second floor or something like that, we could do a renovation loan with a refinance. So rather than someone taking the money out of their pocket or not having enough equity in their home to borrow against in the form of a home equity or cash out refi or something like that, the renovation loan is the answer to that.
Right. Not much of an issue today with equity in people's homes today, right?
Not really, unless, if somebody purchased maybe 5 years ago and they might have put down 3%,
Right.
if it's their first home, and they need $200,000 now to put on a second floor.
Then obviously, yeah.
For example, moms and dad are coming to live with them, or the kids are coming home, or they had triplets and they bought a very small house, but they don't want to leave.
Right.
So they can do that. So if there's not enough equity to borrow against, we have the answer with the renovation loan.
Right. So let's dive in there. So there's two traditional type renovation loans. We have the 203K, which is an FHA based loan, home style, which is the conventional based product. So let's talk a little bit about what the actual renovation loan is and what's the difference between the two.
So I kind of explain it to people that call me and inquire about it. A renovation loan, if you're buying a house, so we're going to lend you the money to purchase the home. We're also going to lend you the money to renovate the home. We're going to add that together into one big fat loan. We're going to base that loan on the finished value of the house, not what it's being sold for. Mm-hmm. Then at the closing table, we take that big fat loan, we're going to pay off the seller or whatever is owed, and then the renovation funds, we're going to hold on to it and we're going to disperse it to the homeowners or new homeowners contractor a little bit at a time as the work is being done.
Right.
So that's kind of a Reader's Digest version. The two different loans, 203K and home style, like you said, one is FHA, one is Fannie Mae. They both work mechanically the same way. They just have two different rule books that we have to go by. So one loan might be better for one borrower than another.
Right.
So FHA follows their rules. They're a little bit more lenient when it comes to income, a little bit more lenient when it comes to the equity in the house, and also credit score.
Right. And especially in today's market where we are stricken with little inventory, a renovation loan is a great resource for potential buyers because they can make the house the way that they want it. You're not buying somebody else's vision or taste. Not a lot of banks do it.
Correct.
And not a lot of banks do it as well as we do. I
Most
believe
don't.
we're in the top, 3 in the country in terms
Yes.
of renovation lending. So, there's a system to what we do, and we have a renovation department. So let's talk a little bit about what that looks like. How does the process work?
So the process is, and just to touch a little bit on what you said, one of the big benefits of this for not only homeowners, first-time homeowners, but also real estate agents is that in today's marketplace, it can open up the inventory for them. There's going to be more houses to look at if they're willing to look at something that might need a little bit of work.
Right.
What you might want to find is the worst house on the best block.
Yeah.
And that's you're going to get free equity right away on something like that. That's your gold mine. And if you're lucky to do that on your first home, then good for you, and we'd love to help you out with it. Basically, if you find a house that needs work, or if something's listed as cash or 203K only, chances are there's something wrong with the home. There's some sort of deficiency or some health and safety issue. That's why you can't close through all your regular banks. Traditional loans on with your regular banks. So basically what the renovation loan allows us to do is to close on the house in the condition it's in, no matter what condition it's in. It can be leaning over to the left and ready to fall down and we'll fix it, or it could be desired updates. It doesn't have to be required. It doesn't have to be a really bad house. Maybe it's a house that somebody found on the right corner in the perfect school district, but it only has one bathroom and they need two. You can do renovation just to add a bathroom, and you can actually live in the house while it's being done. I had one woman who bought a house that was 2 years old. She didn't like the color granite in the kitchen, so she wanted to rip it all out, put in a different color. She used renovation for that. The list of things you cannot do is very, very short compared to the list of things you can do. But the process basically is if you find a house that you think might need renovation, basically what you want to do is you have to hire a HUD consultant. An FHA-approved HUD consultant, and HUD is Housing and Urban Development, for those who do not know. And we can help you out with that. We have preferred ones, but it's totally up to the homeowner who they want to hire. The HUD consultant will come in and they'll determine what is minimal repairs needed on the home.
What the bank is going to require.
What the bank is going to require. All health and safety, buckled floors, holes in the wall, any kind of lead paint that might be hanging around. Any house built before 1978 requires, if there's anything around the windows or chipping or anything like that. Decks, not being stable. Any trip and fall hazard. I mean, it's pretty easy to figure out, what is necessary. However, if you wanted to add rooms on there, or if you wanted to upgrade just appliances or extend the kitchen, they'll give you kind of an estimate as well. So you need to get that HUD consultant. Again, we can always help provide you with a couple of names of HUD consultants. And then you get your contractor in, and we let you use whoever you want. As long as they're licensed and insured, we're going to vet them very quickly and very easily to make sure that they meet the municipality requirements, licensing, insuring, etc. And then you get a bid or a proposal or an estimate on the house. And then we're going to put that together with the sales price, and then we're going to hand it off to the appraiser. The appraiser is going to go, and instead of just appraising it for what it's being sold for, they're going to look at the finished value of the house. That's what we're most concerned of. It's the after improved, as finished, speculated, whatever it might be. So we're going to know what that house will be worth when the work is done way in the beginning. And so will the potential buyer or homeowner as well.
So I always run into, people, they love the concept, but they want to be able to do the work themselves. I'm sure you see that.
I see it all the time. They think that they're going to save money. They want to be the weekend warrior, and they want to do the work themselves. In some cases, we will allow the potential home buyer or homeowner to do some of the work. It depends on what the work is.
Right,
if they want to do painting, or if they, put down the carpeting or something, nothing that requires a license or insurance, we will not allow them to do. Right. But I will tell you that those weekend warriors, it ends up costing them more money than hiring a professional to get it done quickly.
Yeah, and my recommendation for anybody considering this product and selecting a contractor is to find a contractor that has experience working with banks and have done these types of loan programs before. The weekend warrior or the small mom and pop shop, not to discredit them, but if more than likely, not only are they doing the work themselves, then they have to also work with the bank and get us all the paperwork that is required. And typically, in my experience, it's been that the process goes a little bit, it's a little clunky, and it takes a little bit longer to get through the system than somebody who actually has designated staff to help with, you know, the requirements that we need.
Correct. And most of the time, if it's a self-help, we call it, if you're doing the work yourself, you got to lay out the money and then we'll reimburse you.
Right.
So you got to lay out the money for it anyway, rather than using the bank's money to get it done when you have a hired professional.
Yeah, and the banks, they typically want you to complete your renovation project within a certain time frame,
Correct.
which is
6 months. They want it started within 30 days. They want it finished within 6 months. However, there are some leniencies on that too, because certain towns may delay the inspections and things like that. So extensions are given, but not if it's a self-help. They want it done, and it wouldn't be a very big job if it was a self-help.
one of the things that is also nice to know is that the bank is willing to give you up to 6 months of payments that you could roll into the renovation project.
Correct.
So you don't necessarily have to live in the house and go through it. You could finance those months and live wherever you're living for the time being, so that you're not going through, all the dust and
Correct. Because you might be purchasing a house you can't live in. It's inhabitable. So
Right.
you either have to stay put in your home or your rental, or perhaps even like a hotel, or mom and dad's house if you really want to do that. But you can finance up to 6 months worth of mortgage payments. The numbers still have to work, but
Of course.
if it's something that you need, that's available for you as well, whether it's 2 or 3K or home style.
Right.
So, but it's a great program. Like I said, it really opens up the inventory for especially the real estate agents, because they might have a customer that says, "Oh my gosh,
I want to be in this area.
I want to be in this area. I want the kitchen with the purple walls and the yellow flowers. Don't show me anything other than that." The real estate agent might find something in that particular area in that school district, but the kitchen is empty. There's nothing in it, and they might say, "Oh, she'll kill me if I go to see that." That should be the first house that they bring them to go see. Right. They have to do a little bit of a delicate dance and say, "Well, where would you put the island in this kitchen? Where would you want the sink? What color walls do you want? You can have your purple walls and yellow flowers right over here, so it can be the house that they want when they move in."
Right. And the other thing, if I remember correctly, again, is the renovation loans. You could essentially tear down the house to its foundation, right? I mean, I think, what is the rule? You have to have one.
Not anymore.
That's gone.
That's gone too. So if you wanted to do,
that's why we have the renovation expert on the team. Yes.
A tear down and a rebuild, as long as the foundation stays, the footprint or the foundation stays in the same position, then you can just rebuild it again. You can extend it, you just can't move the foundation.
Gotcha.
But we can do that too. That's just a construction loan.
Right.
That just turns into a construction loan, which we have as well, and they're a lot of fun too. But I have a quick story just to give you an example of
Sure.
what renovation loans can do. So years back, I had a couple that came in, they wanted to get pre-approved. They had 4 little kids. They brought them everywhere with them, running all over the office. I got them pre-approved. They didn't even find a house yet. They went around, they found the home. It was in the town of Lawrence, which is in the 5 towns out in Nassau County. And it was a home where a flood came in and it gutted the entire house. And it was an elder couple that lived in the home, and FEMA came and gave them a check. And they said, "We're not fixing up the house. We're going to Florida. That's it." They gave the listing to their agent, said just put it on the market. They got the house for $115,000 because it was just a shell. They put in $238,000 worth of work, so more than what the house was even worth. So we put this number together. They put their minimum down. It was less than $12,000 that they put down, and the work was being done. Before we closed on it, the appraiser went to the house, saw what was there, and then saw the bid or the blueprints, and they figured out what it's going to look like. The value came in at $550,000. So they waited till the house to be complete. Before they moved in, the house was already $550,000. They had over $200,000 worth of equity before they even moved in to their first home. The funniest part about that story is at the end of the construction, I went there and I brought him a bottle of wine, and the dog was thrown up on the new rug, and the kids were breaking the toilet paper holders. But
true.
they were happy and they were grateful, and they've since referred me many people.
Yeah. So, and one other I guess topic that I'd like to cover is, again, I keep saying Sony May. Again, because it's one of the best programs out there. Traditionally lower rates than regular loans, and Sony May actually has their own renovation loan called Remodel New York, and then there's also
The Neighborhood Revitalization Program, NRP.
Yes.
Yep.
So yeah. So why don't you share what that's about?
Well, the Sunny May, I'm sure John has informed and educated everybody, is our first time homebuyer program for the state of New York. The NRP portion of it is there's no increase to interest rate or anything like that. There's no points added. Sunny May will also allow a $20,000 grant to you to do some sort of renovation in the home. It needs to be a health and safety renovation. Don't get nervous about that. That could be new appliances. It could be new windows. The appliances don't have to be broken, so you can do some kind of upgrade.
Right.
New heating system. Maybe you switch over, from oil to gas or something like that. But they'll add that right on there.
Right. So the home consultant that we talked, the HUD consultant that we talked about before, we'll walk the property and kind of identify, what those items would be and how that money would be applied. And then the beauty part is adding the Remodel New York. So now you have, all right, let's say you need 100,000, you're getting 20 off the top, and then 80,000 would
Right.
be, as far as built into your loan, because the 20,000 is a forgivable grant that you don't have to pay.
Correct.
Unless
Free for nothing.
there you go.
Which
There you
most
go.
of the time is not true, but in this case, it's definitely
It's definitely free.
definitely a benefit.
Yeah, 100%.
If you qualify for it.
I love renovation loans. If you have a opportunity to purchase a home that is in need of a little TLC, and you feel that you can't manage both your down payment and the renovations, this is a great resource. It allows you to have your cake and eat it too, and to have somebody as experienced and knowledgeable as Dawn on our team is I can't ask for anything more. Again, we do things differently here. We have our own renovation department. We work in unison with them, and then they handle the renovation piece, we handle the regular piece, and then it bridges together, and we're able to do them in regular time. And I think that's kind of maybe a little bit of the negative connotation about the program too, is that maybe it takes too long, because let's be honest, there's a lot of moving parts, there's a lot of steps that are involved in the program. So, but having people that know what they're doing and that are experienced with it will definitely make your overall experience a good one.
It's not rocket science. There's a lot of moving parts, but it's easy. But there's a lot of easy that goes on at the same time. So we become the orchestra leaders. We make sure that everybody is playing nice in the sandbox. Everything is done simultaneously. As John mentioned, our concierge department takes care of all the property piece and the contractor piece simultaneously as we're getting the income and the credit approved.
Right.
And then it all comes back together and it works out very nicely, and we know what we're doing.
Definitely. So we're going to have you come back another time, because
I'd love to.
I'd love for you to talk about the construction piece, because that's another piece of this that we do here. So I do appreciate you taking some time out of your day to spend with me. How do people reach out to you?
You can reach out to me, call me anytime. My phone number is 631-860-4845. My email is dcameron@CMG Home Loans. Love to hear from you. Any questions, I'm more than happy to help.
Awesome.